It's Friday, January 10, 2025, and as you have probably heard, we have huge amount of fires going on in California. I am in California, but I'm in Silicon Valley. However, my cousin actually lives. She had to evacuate, so please consider donating to LA fire victims. Most likely the best thing to do is to donate to the American Red Cross. That was a public service announcement. Stocks dropped on thoughts of strong economy could help rekindle inflation. I'm not making this up. I actually quoting it from the internet. Bond yields approach 18-year high. By extension, the bonds are dropping. And dollar hit a 2-year high as a result of all of this. However, gold is performing quite well despite the strong dollar. And finally, we will look at Bitcoin and Solana. I've been asked several people to get rich quick. I'm kidding. But yes, those things quite move sometimes quite strongly, so we'll look at those today. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, January 10, 2025. Don't forget to hit the like button, subscribe to this channel, share this video. If you're a subscriber, stay tuned. We'll cover various securities, including market breadth. We're going to be covering in the members only video, ETFs, large cap stocks, speculative securities, as well as some of the gold related. As always, I'll be using my proprietary MasterChartsTrading.com price action indicators, which you can see on this chart. This green, blue, red, and yellow lines, they are available for trading view. We're currently looking at the S&P 500. It has hit record all-time highs on December 6 and has been under pressure ever since. So notice on this chart this big drop. This is a 18th of December. I believe this was another Federal Reserve event. The investor didn't like it. But notice what happened. We held support at this green line. So notice we did not pierce through it on several occasions. We touched it on the 18th, 19th of December, 20th of December, again on 2nd of January of this year, and finally today, on Friday the 10th of 2025, January 2025, we finally pierced through it and closed below it. In fact, this is the lowest level since November 6th. So the support at this green support resistance line finally was broken, and if you're watching my videos, you will have heard that these lines provide support and resistance. So at this point, they were providing support. However, you can see the support was just broken. So what can we expect? And we can expect something like this. For example, here in August of last year, 2024, we kind of pierced this green support resistance line, and then we went almost all the way to the blue line. So at this point, if we actually were to hit the blue line, I would have issued an alert to buy it. We didn't. So basically, if you had a position, I would have just kept it open. We could also get something similar to what we got back in October of 2023. You have to realize this is the last time there was an opportunity, October 23, November 2023. So again, at that point in July of 2023, this was an all-time high, and then we pulled back in this relatively longish period from August all the way into October. So we had almost 3 months worth of pullback. Finally, we went below this blue support resistance line right there on 20th of October 2023, kind of dropped a little more and then finally closed above it yet again on the 2nd of November 2023. So this was our signal to buy. We were absolutely correct. Stocks went on a tear and continued for a very long time, and in fact, like I said, until very recently records were hit. So right now we're waiting for what's gonna happen. We have about 4% down towards this blue support resistance line. Now at that point, if we do hit that level, then it would become a buying opportunity. So S&P 500 would become a buying opportunity. We want to be buying at that point, because at that point the risk would be less than if we were buying at new records. I mean, the lower it drops, probably the better, but we have to be also we have to understand that if the security continues even lower, like towards this red line, so the red line would also mean like caution. And if it continues even lower towards the blue line, towards the yellow line, then at that point, and we close below the yellow line, then it would imply a new bear market. That is still quite far off. It's about 15% away from today's price levels. Can we get there? Absolutely. I can show it to you how it happens. So, for example, this was back in 2022, March of 2022. We closed above the blue line, but then we kind of turned around, went as far as the red line, and then finally in April of 2022 went below the yellow line. So at this point, this becomes a bearish security, and we want to thinking about selling it. Now, this bear market was very, very small. That was, you know, like just a few months from around May of 2022, maybe April of 2022, until October, well, actually a little bit longer, until right there where the breakout occurred. So in April of 2023, so about a year, actually. It's about a year, but this was not a steep decline. We can also look at some of the bigger bear markets, as we had, for example, back in the famous ones, as in 2000. There it is, 2007. So the breakdown in 2007, you can kind of see very similar, you know, to what we have now. I mean, there's no difference really. It's just price action. We had a breakdown right there in June of 2008 rather, and basically at this point we want to think about selling it, shorting it. And yes, would have been very much correct until finally it bottomed out right there in 2009, and then continued higher, and then we had a breakout into a new uptrend in 2010 September, and then we have a new bull market. So my indicators basically provide you with this guide, I don't know, rails or whatever you want to call it. We can use them during the bear market. We want to sell it. We can use my indicators to sell them, to sell the security. During the bull market, we obviously want to be buying. Currently, we're still in a bull market. I'm just showing to you that sometime in the future, most likely, we don't know exactly when, but we will absolutely 100% have another bear market. We just don't know when. Could this be the beginning of a bear market? There is no way to tell. But we will know it once it happens. So like I just said, we want to see a close below the yellow line, and at that point we'll say, okay, now we are in a bear market. We want to think about selling, but for now we want to be thinking about buying. So if or when we get to this blue support resistance line, which is currently 4% away, and we see a bottoming pattern. What do I mean by a bottoming pattern? I want to see a low, at least a low below the blue line, and then a close above it. So that's the bottoming pattern. Okay. At that point, we have this, the setup and the signal to buy. So let's wait, not yet panic, but just wait and see what happens. For now, we're still in an uptrend. Security S&P 500, the stocks are in an uptrend, but clearly so is the 10-year Treasury note yield. So the yields on the bonds are also rising. By extension, bonds are dropping. I'll show it to you in a second. In fact, this is approaching a 18-year high. So let me show it to you. We are currently approaching an 18-year high for the interest rates. So previous high was a 17-year high that was set in October of 2023. The interest rates eased off quite significantly, and I was expecting them to continue lower. However, that did not occur. We turned around, and yields again are climbing pretty steeply. Why is that happening? Well, I guess because several things are happening at once. We're seeing a win by Donald Trump, but there is no really a clear plan to cut spending. So one of the explanations we're seeing is perhaps the bond investors are trying to get higher interest rates because they think that government may default. Can this happen? Absolutely. So we're approaching 18-year highs for the interest rates. So this type of interest rates haven't been seen since 2007. Okay. What does that mean as far as the Federal Reserve goes? Well, most likely they will need to cut the interest rates again, but then if they cut the interest rates, then the inflation will increase. So it's one of those situations where they're damned if you do and damned if you don't. If the interest rates increase, then things like real estate will come under pressure, and actually stocks also, because people like to borrow money and then trade stocks with that borrowed money. But a bigger thing, of course, is the real estate, and to a lesser extent utilities. So for now, the real estate, we actually look at real estate. So IYR, there's real estate. It is definitely under pressure. It's not the worst performing, but we can also look at utilities, XLU, and they're not that bad. So for now, this interest rates are, they're having an effect on the economy, but not like very drastic. So for now, it's not too bad. And we will continue monitoring this. As I said, the interest rates and bonds move in the opposite direction. So here is IEF, 7 to 10-year Treasury bond fund, and you can see that it dropped below this red line. So now at this point, if you are, for some reason, want to short bonds, then you could try to do that. Not really recommended, because it's a very high yielding security, so you end up it's just not worth it for you, basically. But some people are able to trade the actual interest rate on non-United States markets. So we are not able to trade this, but yes, you can use my indicators to trade the security if you are outside the United States. So interest rates drop, increasing, stocks are under pressure. Dollar. So we're currently looking at the dollar, DXY. Dollar euro dropped to multi-year lows, I believe. Let's look at how far it went. So this is euro at lowest level since 2022. So 2 to 3 year low. The previous low was set back in 2022 with a 20-year low for euro. British pound, GBP USD also dropped pretty significantly. We can actually kind of better see it on the daily chart. It's almost like a collapse. Okay, so if you are trading British pound, then you can very clearly see how to trade it. So there's the breakdown below the red line in November, 13th of November, a bounce, and then you can short it again. And you would have been very correct if you trade Forex. This is a huge move. This is 500 pips move. With leverage, it's a very large move. So big moves in the currency arena. Dollar DXY at 2-year high. There's a 2-year high DXY. Now gold, we do trade gold, so gold is traded in dollars. Gold divided by US dollar. The US dollar is getting bigger. This bottom part of this equation is getting bigger, so shouldn't this currency pair be dropping because the bottom part of this equation is getting bigger? So shouldn't it pull this currency pair lower? Gold is doing the opposite. It was actually able to overcome resistance at the green line where I'm hovering right now on 2nd of January, and then now it's continuing higher. I think it might challenge the all-time highs pretty soon. So as I said, perhaps this is the reason what I was just saying. The investors are thinking, okay, so interest rates have increased, so the Federal Reserve will need to cut interest rates. That means the inflation will increase. And what's the inflation hedge? Gold. So perhaps this is what the anticipation is. Again, this is a conjecture, so this may or may not be true at all. But looking at this chart purely from technical perspective, gold is in an uptrend. We are buying gold. Notice this previous alerts or previous opportunities to buy. Pretty straightforward. Buy at the blue line on any pullback towards the blue line, and it continues higher. Again, you can have the same indicators on your chart. And finally, we come to the point of people just love cryptocurrencies. I mean, I can see the traction. They do move like crazy. So this is Bitcoin on daily time frame. How do we trade it? Exactly the same way as any other currency. Okay, so originally, back a while back, right there on 50, I can tell you exact date because this is exact indicators. So we have 15th of February 2023. There's the breakout. Before it was below the yellow line, below the red line, so we were selling it short with very successful trades on the short side. It turned around. I'm agnostic. I don't really care. I can go up or down. It doesn't matter. We're buying it now, buying it. Opportunities to buy on pullback towards the blue line. Pretty straightforward. Anytime there's a pullback towards the blue line, we buy it. Okay. So far, it's been working quite well. We are at all-time record highs for Bitcoin. Another pullback towards the blue line may become another buying opportunity. Okay, let's look at Solana. Solana is for some, I don't know why, but people love Solana too. So very similar patterns, no difference. We're buying on close above the blue line. Original breakout. Okay, so not a perfect, obviously not perfect. So here's Solana back in 2023. Sell. Turned around, but that was a false signal. We need another false signal right there in September 2023. But then very nice signals. There's one in October 23. It went from 24 to 122. Yeah, that's pretty good price, I think. It's a huge gain. Same thing, buy at the blue line. Look for opportunity on pullback towards the blue line. Latest opportunity, right there where I'm hovering on 2nd of January as well. Okay. So far it hasn't really been working, so we turn around and we actually are in danger of going back into a bear market. So let's watch this level for Solana. The level for Solana to watch is at 168 or so. If it drops below 168, then we may consider selling it short. For now, we're still in an uptrend. We want to be thinking about buying it. All right, let me know what you guys think. Make a comment. Like this video. Don't forget, once you're ready to sign up, head over to MasterChartsTrading.com. Click on sign up. So I have trading indicators. Again, you can have the same lines on your chart, this green, blue, red, and yellow line. You can trade Solana if you like. You can trade Bitcoin. You can trade any of the stocks. The indicators are available for TradingView.com. TradingView.com is a free interface. Once you sign up for free on TradingView.com, come back to Master Charts Trading. Send me the sign up for trading indicators, and I will open the door for you so you can see the same lines on your chart. Now, these lines really simplify trading. I pretty much use them exclusively. If you just want a newsletter, so I send out daily alerts about various securities that we trade. For example, this week we will cover in the members only video, and all of the securities were recently mentioned or alerts were issued about them. So various ETFs, large cap stocks, various speculative securities, as well as gold related. And of course, the best deal is to get both trading indicators and newsletters. Currently, they are at $49.95 per month equivalent if you buy a yearly subscription at $599.95 per year. You can also buy monthly subscriptions, and they're slightly more expensive, but both of them come with a free, all of them come with free 7-day trial, so you have a chance to try it out. If you don't like it, you can always cancel. That's it for this week's recap. Thank you for watching and have another great trading week. Bye-bye.